find too many stocks to crib about or cry about right now. So it's a very green screen. Now, Anuj, let me come to you with the most difficult question, because there's this 1,000-point gap up on the bank Nifty, a near 3% rally on the Nifty. How does one trade the rest of the day, considering it promises to be very volatile, right? Because we also have the finance minister press conference in the middle of the day.
You know, Surabhi, traders will understand that if you had sold the first thing in the morning, you're already making money. Now, I'm not saying that, you know, the market will, capitulate, but, if you bought in the morning and chased it at 95.57, you're already 90 points down on the Nifty. So let us see. I think what you have right now is obviously those who would have created positions yesterday perhaps squaring off some of it. I think what I'll keep an eye on now is whether there's a second wave of buying which takes out the morning high. So I think that will be an indicator that the market wants to have a big trending day. The first bar on the Nifty future and Bank Nifty future is actually a big red bar. So because you opened straight away that much higher, and after that perhaps there was no trade. So that's my limited reading of the screen so far. As I said, I will see if the market is actually giving more gains from here, or is trying to come back to the morning highs. But here, frankly, I don't think there's a trade. But Ashwini, you tell us, is there anything that is opening up for you in terms of long or short?
See, you sold off, I think, 100 points from the highs. Now, this is the sort of zone from where the market should turn for it to stay a positive day. But if we start to break, say, 9400, then, trouble can start. So, as I said earlier, do not buy euphoria. These sort of package, etc., they are not going to spend the money today. So the global issues are more important. If we turn from 9400, we look at buying. If 9400 starts to break, then you'll have another one of those gap ups which got sold into.
Okay, and Mitesh, your thoughts?
Yeah, I would wait for about 15-20 more minutes. I think we are just around this 94.50 mark. Let's see whether we have the first half-hour bar closing above these levels or not. So as of now, in wait and watch mode.
Okay, well, at the moment, the Nifty Bank remains the outperformer, so we have to get a handle on whether that will continue to be the outperformer. In any which way you design the package, the banks will have to be benefited, because they are the ones holding everybody's problems, as it were. So, Ashwini, is there a trade in the Nifty Bank on the long side at all?
See, if you can keep deep stops, because 200, 300 point up and down will happen today.
Sudarshan, thanks for waiting by. How are you approaching any specific stock, or for that matter, the Nifty Bank Index?
Well, the Nifty Bank Index is a buying opportunity if it falls another 500 points from here. And that would apply to the Nifty. If it comes to 9400, we'll take a long trade with a 75-point stop loss. For Nifty Bank also, if it comes to 19,500, put a 500-point stop loss and buy it. But it needs a sharp dip intraday.
All right, gentlemen, thanks a lot for taking us through the market opening. It's been a very strong opening, and now there's a second wave of buying which is happening, especially in the Bank Nifty. Let us see where it goes. For now, we have our next guest joining us, Sailesh Raj Bhan, Deputy CIO Equity Investments at Nippon India Mutual Fund, is joining us. Sailesh, hi, good morning. Thanks a lot for joining us. We had this big 20 lakh crore package announced by the Prime Minister yesterday, and the market is excited. How should portfolio investors approach it now? Go full tilt on high beta domestic stocks, shun the defensive nature of the portfolio, or just wait for details to emerge and then take that call? What would be your view?
Yeah, while details will come over the next few days, the most important development has been the fact that this brings about, the challenges which were there, the two big challenges in the economy will actually possibly get addressed as we get along. First was there was a crisis of confidence because of the uncertainty on the healthcare issue and such stuff, right? And that uncertainty was leading to postponement of demand, or the lockdown was leading to postponement of demand and such stuff. Second big thing was the cash flow related issues, which have been leading to loss of business, which has happened in the last couple of months, and which were also leading to a fact that the outlook was appearing hazy. I think these measures do address the core of the problem as we know as of now. And we think directionally this will bring back confidence and possibly help address cash flow issues if they have that kind of because there's been talk on MSME cash flow, there was talk on liquidity as a core part of the 4 steps which the Prime Minister has talked about: land, labor, liquidity and laws. And I think all these are core issues in the system which I think are being looked into. So directionally, I think this creates a platform for some preponement of demand, creates a platform for more confidence and cash flows in the system, which I think was the real issue rather than the issue which was, this was primarily the real issue in the system. So ideally, a lot of high beta companies, or I would use the word companies which are oriented towards domestic demand, will start seeing far greater participation as we get along, because they have been under pressure for the last several years and more so have been impacted because what's happened to the financial system and various other stuff. So yes, there will be a greater emphasis on paying right for these kind of businesses. And as economic growth and volume starts improving by around festive season, if you have a decent economic volume and recovery, some of these investments can be very attractive today.
Okay, Sailesh, good morning. Well, while we know that today is a big reset moment, and I think it's hard to guess things till we know the contours of the package, my question to you is specifically on financials, because up till now we've seen extreme volatility even in the biggest financial stocks. So given that we're in a new normal and this is this COVID world is here to stay for a while, are you tweaking your approach to the bigger banks, the larger financial holdings within your funds?
Directionally, we have been underweight on financials through even the rally, because they were all getting waywardly valued. And we were seeing the big divergence between the economy and the financials over the last 1.5 years. We think if you look at entities there, like, in the banking space, there also has been a material amount of consolidation, in the sense virtually NBFCs as a category has very little visibility on growth today and availability of capital. So hence, larger banks will continue to consolidate. The big problem was coming from the fact that what will happen to their banks' books in the next 2 quarters when, the moratorium ends and cash flows were weak. I think if this package addresses these issues, I think the top 4 or 5 franchises which have strong liability deposits and such stuff, I think are very well positioned to come out of this, because people will need credit to grow out of the problem also, because only growth can solve this problem. I don't think other than growth solving this issue, because it's a function of more economic activity, business and cash flows being generated. And what directionally has been talked about by the Prime Minister on land, labor, liquidity and laws is actually creating a platform for strong domestic growth. I think will be the position. So our emphasis is only on the top leading banks with strong deposit franchises, which will be able to withstand the couple of quarters of difficult financial numbers because of the credit losses which will entail. And we think they will come back far stronger. Also, you would see this sector has also borne the brunt. It's down, this index is down 30%, this is down 35 to 40%. And some businesses are down 50 to 60% as well. So it does factor in a lot of pain. And some of these businesses have some of the best customers of India, in the sense the top 5-10% of customers in India. And such franchises have a long way to go from here.
Okay, fair point, Sailesh. I just want to point out 2 things which perhaps are positive tailwinds for the economy itself. Over the last 24 hours, we have had the highest single-day set of recoveries. 1,931 recoveries, and they are more than the number of cases added for the first time. The number of new cases being 1472 in the last 24 hours. Of course, the regimen of releasing patients also is now a little easier. Otherwise, they had to go through 2 tests. Now, we've eased also because you need to release the space for new patients. But that is very positive that today recoveries are more than fresh additional cases. And another positive, which perhaps for the market was immediately reflecting, is that the Dow futures were mildly negative up until maybe 9 a.m. or so, and now they are mildly positive. So mildly. So that also perhaps is a bit of a tailwind. Asian markets are not as negative as they were in morning trade. Sailesh, your analysis is most helpful. But I do want to know what will your analysis on finance, I meant, but what will your sector preferences be here on in this changed new normal?
I think our sector choices primarily come from two very important areas. What is the outlook for those sectors for the next 1 to 3 years, leaving aside the problem